Hey there, Investorholics. Welcome to another ETF Spotlight review. Stick around and we're going to learn some new stuff today. Today we'll be looking at ESGI, which is the VanEck Vectors MSCI International Sustainable Equity ETF. So this ETF could be appropriate for investors seeking exposure to a diversified portfolio of companies that have a strong focus on environmental, social, and governance. Good if you don't actually have time to go out and do the research on the individual companies for yourself. You can gain exposure to companies like Home Depot, Microsoft, Amgen, Sony, and Siemens. During the quarter ending 25th March 2021, ESGI's ESG score improved slightly from 8.7 to 8.8, and the overall ESG rating remains at AAA. So they're increasing the ESG component, I suppose. So it's getting better. Hey there, Investorholics. This is Scott. Crack the Sky Value Investing will be giving you up-to-date investing news and content so you can navigate the markets wherever you are. My mission is to give you the knowledge and confidence to take control of your personal finances, expand your investment horizons, and crack your financial sky. Okay, so let's have a quick look at the investment objectives. So ESGI gives investors exposure to a diversified portfolio of sustainable international companies listed on exchanges in developed markets around the world, excluding Australia. The ETF is going to try to track the index as best as it can before all the fees and costs. The usual malarkey. So the MSCI World X Australia X Fossil Fuel Select SRI and Low Carbon Cap Index, which is a bloody mouthful, aims to represent the performance of the diversified portfolio of international companies that have high environmental, social, and governance performance. So that is the ESG component, environmental, social, and governance performance. Why are we going to bother with this one? So international equity portfolio incorporating investing values and beliefs. So true to label, international sustainable equity ETF comprising both values-based and environmental, social, and governance investing. So it covers off all those criteria, which we'll have a bit deeper look at in the coming slides. A focus on ethical standards and low carbon impact. Actually, my brain actually works here. So screening for fossil fuels, human rights, controversies, I suppose, so the companies that involved in slavery or whatever else in their supply chain, and social responsible investments. So we're looking for things that are socially responsible, combined with ESG leadership and low carbon impact. The final sort of factor here is state-of-the-art ESG leadership approach. So this is more to do with the index itself. So leveraging MSCI's leadership resources and its ESG and carbon emissions data metrics. So obviously there's quite a lot of background data that goes into generating these ETFs / identifying which companies will actually be a good fit. So I mean, if you want to do extra research on that, all that information is on the VanEck Vectors Australian website. Okay, let's have a look at some numbers. So we had a net asset value of $27.13 when I did the research for this one. I was trading just above that, $27.27. Market cap relatively small, relatively new. $76,800,000. As I said, it's pretty small. Management cost per annum of 0.55%. Distribution frequency, so you get paid a dividend in July. A dividend yield's pretty low, 1.63%. So ESG holds a total of 163 companies in its portfolio, so excluding businesses that are involved in or exposed to alcohol, gambling, tobacco, military weapons, civil firearms, nuclear power, adult entertainment, genetically modified organisms. So the index aims to achieve diversification by capping the maximum weighted assessment to each security, thereby avoiding concentration risk. So if you go through, you have a look at the next slide anyway, it'll show you the breakdowns by percentage. So you're not really looking at much over 5.5% for the top holding in this ETF. So percentage assets in the top 10 accumulate to 32.71% of the total holdings. Price to earnings ratio for the last 12 months is sitting at about 23.04, which is pretty high. Price to book, you're looking at 2.85, which I think is a bit high as well. This ETF could be appropriate for investors seeking exposure to a diversified portfolio of companies that have strong focus on environmental, social, and governance. So yeah, look, mainly what this whole thing is excluding companies that own any fossil fuels. So oil companies obviously aren't in there, or obviously without oil or coal companies type things. Excluding companies whose businesses activities are not socially responsible. So we kind of touched on all those things that aren't necessarily socially responsible just in the slide just a second ago. And obviously targeting the ESG leadership in each sector and excluding high carbon emitters, because I think what you're going to see over the near future is definitely a greater focus on reducing your carbon footprint. So therefore those high emitters are going to get taxed, or they're going to be forced to reduce their emissions. So that means their business operating costs is going to go up. So you definitely don't really want to be exposed to those type of companies. As always, make sure we do our research and check out the companies just listed here at the bottom of the slide. Okay, as mentioned before, we can have a look at the top holdings here. So Home Depot, 5.7%, Microsoft 5.62%, and pretty much everything else is much lower as we go through there. So Amgen, Sony, Siemens, Novo Nordisk, BlackRock, Allianz, who's this mob here? Some electric company, and Gilead. Total return since inception, that's sort of in early 2018, I think it was April sometime 2018, you've seen a 11.2% return per annum, which is very, very solid. I mean, you can have a look at the graph there and kind of shows you the accumulation or cumulative value of a $10,000 investment since the fund's inception. So your 10,000 would have turned into almost 14,000. Research from academics, asset managers, and index providers have found a link between good ESG performance and improved financial outcomes, largely through risk reduction. So targeting high ESG performers can therefore pay real dividends to investors. As I just pointed out there, you know, getting over 10% per annum, which is pretty phenomenal, to be honest. There's not a lot of funds that can do that. Obviously, past performance is no indicator of future performance, but it is an indication of sorts. Companies with strong ESG profiles typically enjoy enhanced corporate performance and financial returns, which is what we're always looking for. Targeting these companies can enhance returns for investors, society, and the world. Tick, 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 tick. An investment in the ETF carries risks associated with it, as if anything. Financial markets generally, individual company management, industry sectors, stock and sector corrections, fund operations and tracking an index. It's kind of a bit of a grab bag of all the different types of risks associated with investments in general. Have a look at the PDS for further detail if this one interests you. It's definitely, performance-wise, I think it's something to look at. If you're looking for dividends, I don't think this is a place to be. But if you're looking for a good return with an ethical type of bent, I think this one definitely something to look at. It is quite small, so liquidity is low. And also, if we have a look at if we remember back to the previous slide, we saw that the net asset value is actually lower than the share price. To me, that is not a buy. So we don't want to be paying more for a share of the company than it's actually worth. So what we want to do is wait. If you are interested in this one, wait till you see that the actual share price is lower than the net asset value, or the same, or within 1 or 2 cents or whatever. So we don't want to be paying a lot more for this asset than it's really worth. So I think in the long run, it's probably something worth looking at as this investing style becomes more popular, which I think it will. This ETF and the other sort of ethical investing ETFs listed on the ASX will grow, and I think there'll be just more interest. So you're going to get fund managers and advisors cycling out of a lot of companies and ETFs and things that aren't actually ethically inclined, and cycling into these type of products. So I think that'll definitely drive share price appreciation as well as the performance of the underlying companies. Anyway, guys, hope this was helpful and informative and added some value. Yeah, look, don't be afraid to give us a thumbs up and a like. That always helps. Subscribe, which is really, really helpful. Just get the algorithm looking and pushing out these videos for me. Yeah, thanks, guys. Are you interested in learning more about personal finance and investing in the markets? If you are, then smash the like here on the left hand side and caress the subscribe button on the right hand side. It's KrackTheSky Value Investing. We'll be giving you up-to-date investing news and content so you can navigate the markets wherever you are. Expand your investment horizon and crack your financial sky. Thanks, guys. See you later.